Hello my fellow freedom builders and welcome back to the channel. Now we have moved a bit into 2021 and it is time to look at some rock solid value stocks again. I know that value is not really the thing right now. Everybody wants some hyped up stocks that is not going to produce any revenue or profit for the next 2500 years, but maybe some of you are still interested in some stocks where the stock price has not run completely crazy, that are producing a profit, have some great estimates, and are pretty much just some quick, a bit slow movers maybe, but some big companies. And I'm going to show you 8 of them today. Now the way I find these, and I'm not going to go into details with these, you can pretty much investigate them yourself and research them further. But I'm using the Fast Graph software here. I'm not affiliated with them in any way, but they have quite a nice piece of software here, and I am screening for some different things. Now I want an S&P credit rating of BBB plus or above, meaning that I'm getting some quite solid companies here. I'm using only US companies. I want a PE somewhere between 5 and 20. I have mentioned in other videos why I have chosen these, but that is quite a stable level here. I want an earnings per share yield of around 7%, cash flow yield 3%, and a market cap above $5 billion. Good. Then I want some historics. I want to see over the last 3 years an earnings per share growth of 5% or above. And I want to see a growth in cash flow of 5% or more. So that's the historics. And then on the estimates into the future, I want some estimated earnings per share growth of 3% per year. So that's basically it. I'm looking for good and solid companies. Oh, I think I forgot one. Let me just see. Long-term capital to debt. Yeah, well, I normally have this one at tops of 50, but right now I just took this one off. That gives me 8 names out of 23,000 different entries here. That is, oh, sorry for that. Yes, we have Amerisource Bergen, we have Bristol Myers, Cigna, General Dynamics, Lockheed Martin, Mckeeson, and Merck & Co. And let me just quickly go through these 8 so you can see why I have chosen these. Now I have opened all of them and I'm looking here at the standard Fast Graph window here. I've chosen 12 years and that's because then we get the last 10 years here and 2 years of estimates. And what I'm looking for here is I want a price, that's the black line here, that has been oscillating around the growth and earnings per share lines here. So they are following these fairly stable. Now Merck & Co, we started from the bottom end here, and as you can see, every time they have been into the green area here down below PE of 15, they have actually been shooting up quite massively. I don't know, it doesn't seem like a lot here, but again, over a couple of years, let's just see here, 22% annualized, including the dividend. So that is actually very fair. Right now, we are down in an area where if the stock just over the next couple of years could move here from the current price and up towards this growth line, we would see at least around 14%. If it shoots any further up, we can use the forecasting here. If over the next couple of years it shoots up as it tends to do, we can actually see almost double, maybe up towards 30% per year here, including the dividends. So Merck & Co is at a fair level. You could say that right now it has actually been moving sideways for quite a long time. And yes, these are not fast movers. These are stocks that you might consider doing some covered call strategies on. I know I promised to make some videos about covered calls, and that I will get to that eventually. There's a bit much work right now, but this could be a candidate for some covered calls investing strategies. So over a number of years from 2013 and up until now, you would have been able to get around 12% per year, which is actually not bad at all. So have a look at it. The next one is Mckeeson. And as you can see here, the same picture, Mckeeson has been a very good value stock down here when it was in the dark green area. And again, when it is down here, it means that the stock price has not grown as quickly as the growth in the earnings. And well, I know that normally if you're swing trading, short-term trader, then the fundamentals are not that important to you. But over time, we just need to realize that people want some sort of return, some sort of yield on their money, and therefore when the price has gone down here but the earnings simply keeps growing, at some point the investors start to think, well, this is actually some very good value. There is some divergence between the price here and how the earnings are going. And for instance, if you had grabbed it down here as a good value stock, you would have been making something like 30% per year over the last couple of years here. So right now we are still in a very good dark green area, but we are also in an uptrend, which I as a trend follower like. And if this one should go just up towards the blue PE line here over the next couple of years, you would be making a decent 20% per year, including dividends. That is this white line down here, that is the dividends. So if there is no white line, it means that it is not paying out any dividends. So Mckeeson Corp, absolutely also an interesting candidate. Then we have Lockheed Martin, and that one has been expensive. I've been asked about it the last couple of years here, and I've said, well, it is up in the area up here where it actually tends to be a bit expensive. But right now it has been diving into the green area. Well, I don't really like the drop here. I would like to see, if I were to buy this, if I could pick it up somewhere down here at a bit lower range, maybe down around 300, 250, 300. But then again, I still would like us to see a drop and then see some sort of beginning transformation into a bull trend. But it is absolutely, if you bought it here and it were to move up towards this line over the next couple of years, we would still get a decent 15%. But if you can pick it up a bit lower, that would also be nice. And I know you think, pick it up lower, since when are you starting to bottom fish stocks, Hans? And I am not. So that is again what I'm saying. I'm not picking stocks that are moving downwards in a downtrend here, even though they are in the green area. I would, let's say for a case like Lockheed Martin here, let's just have a look at a further time span. I would not pick it up here simply because it was cheap. I would wait until I could see some decent uptrend, something like this, and there would still be very much upside, 31% per year over a number of years here, simply by picking an uptrend from a value area and then keeping it. So you should never underestimate the keeping cheap, but I do like the uptrend part, because no one knows, and I know that sometimes technical analysis is blamed for trying to predict the future, but no one knows where the bottom is here. And fundamental analysts also try to predict the future by saying now it is too cheap, it can only go up from here, and sometimes it can still go down 90%. So no one, not technical analysis, not the fundamental analysis, no one knows the future, but we can look for cheaper stocks in an uptrend. All right, that was the Lockheed Martin. Let's have a look at General Dynamic, a stock that I actually, I made a video about this, I think it is about a year ago, where it was also down here in the green area. And you could say it has been moving up and down, but I think it was around here I made the video actually, and we could have made something like 27.5%, including the dividends, since I made the video. But it is still in a good area here, and you could argue that it is starting a good uptrend. And if we should see the stock go up to the PE line here over the next couple of years, a decent 14.4%, including dividends. So General Dynamics, absolutely also a candidate. Then we have Cigna, so a company I've also mentioned a couple of times. I think the first time was around down here in last spring, somewhere here. Maybe it was even earlier actually, but let's just say it was here. We could have made right now almost 32%. But what I'm looking for right now, of course, is the future. And if we are saying that this is good value and we can see that the earnings are just exploding, should we come up to the brown orange growth line here, as we can see we have been before, then we would be making 25% per year over the next couple of years, including 0 dividends, because they're not paying out dividends right now. But with a 25% per year, that is actually okay for me. Of course, no one knows if it's going up here, but just see here that we are actually starting a very good trend. And as long as that trend runs and we are in a fundamentally good area, then this is something that might fit into your long-term strategy. So this is not for a few months. This is actually for several years you would buy this. This one I have been mentioning in several videos. I think I started here back in beginning of 2020, or was it just in the end of 19? And it has been moving sideways, so you might say that was not a very big call. Well, that is the thing with these stocks, these long-term value stocks. You need to be prepared to stay in them for a year or two while they're making their way sideways. And in that time, you can actually make somewhere between 5 to 12% per year just selling covered calls on them. And that is what I am doing with these very long-term US stocks I have. But if the Bristol Myers should be moving upwards, you can see here just up to the growth line here, we are still looking at almost 40% per year over the next couple of years, with some great dividends as well. So the Bristol Myers as a long-term play, definitely something that is in my portfolio, no doubt about that. Then we have a couple of stocks left. We have the Amerisource Bergen here, I think it is pronounced. And again, you can see pretty much everywhere on the line where you have bought it here down in the value area, you would have been getting a good deal. It might have taken several years, but just see here, I know 10% per year doesn't sound like much right now because everyone is a stock guru and the market can only go up. But believe me, at some point it will go down as well. And right now we are sitting here on a stock that is actually yielding quite well, and that have some great potential of moving upwards with something like 14-15% per year over the next couple of years. So again, a decent value bet here, and also a stock in a good uptrend. I have been in it and a couple of times in my shorter term portfolio, and you can also see down here when it was in a value area and started an uptrend, it started a very good run, making 53% per year over this time span here from 12 to 14-15 here. Okay, so Amerisource Bergen, absolutely a play as well. And the last one is AbbVie, also a stock I made a video about back here. I think it was in the end of 19, some of my first stock of the week videos. And it has been very volatile, but still been making 26% per year since then, including dividends. So I must say this is one of my more successful calls. Now I'm taking this on the top. It might have been a bit down here or a bit down here, and that of course would have made it even better. It would have grown up to 56% per year had we gone in right here. But again, I'm looking for beginning trends and not just trying to bottom fish something, because then you could argue you should go in here at 92, but over the next couple of years it would drop to 66 and you would be down something like 30% of your money, and you would have had your money sitting idle for a year or a year and a half here. We don't want that. We want to make some money on our stocks. So that was the 8 candidates. It was AbbVie, Amerisource Bergen, Bristol Myers, Cigna, General Dynamics, Lockheed Martin, Mckeeson, and Merck & Co. I hope you found this inspirational. And if you want to see some more videos from me, remember to subscribe, hit the like button, the bell notification, everything down there. And I will be back soon with some more videos. Take care of yourself and your money out there. Talk to you soon. Bye.